Right now, let's talk about the institutional brokerage business and how's that particular space looking up. Motilal Oswal, the CMD of Motilal Oswal Financial Services, now joins in. Mr. Oswal, morning. Thanks for joining us. We have been talking about how tough the environment has become for institutional broking. Over the last few months, the cash market volumes have really come down and the competition has gone up. We've seen a couple of players actually also shutting business. So is this kind of pressure going to continue for some more time?
I think if you look at the data for last 2 months, market activity is increasing compared to the Q1 of this year. My sense is that we have seen the worst in the first quarter and things are slightly improving. We also had Global Investors Conference this month, and we had huge amount of interest from the institutional investors for India. I think there were a lot of new investors, and even existing investors were looking at with a lot of kind of I would say positive cues. So overall, I think activities are increasing, although the markets are really giving a lot of jitters, especially the global markets, and we see some kind of pressure here on the margins because of very high interest rates. But my sense is that slightly we are moving for better time.
So Oswal, morning, sir. They say, for brokers, it should be okay to charge brokerage. Doesn't matter whether the market's going up or down. But it doesn't work as per that simple logic, right? Because sentiment is very important. And typically, we do see volumes come off when the market is down. What is your sense when you say that from this investor confidence, you feel that, better times are around the corner? Do you mean in terms of institutional participation, or do you mean in terms of fresh money coming in and the market actually moving up?
I would say from the institutional interest perspective, I think everybody is seeing that India is still a story which is going to unfold in short time, especially in the global environment, which is very bad. So I think people are interested in India, and wherever you see some kind of value, some of the small mid-cap stocks have gone up by again 30 to 40%, wherever they had fallen sharply. So from that perspective, I would say there is a kind of, I think they are willing buyers at a certain price. And what we saw in April and May, I think we saw the worst time in terms of overall activity also. So I think activity on the future and option sides has gone up, although cash market more or less remains same. But we are not really going below what numbers we have seen in first quarter, even in cash market.
So Oswal, is consolidation going to be the next move that we're likely to see in this industry? Because quite clearly it looks like some of the smaller players actually may become uncompetitive. So going forward, is that something that you would expect?
It's already happening through kind of, I think, natural attrition process. I think some of the small players, they are already I think lying low, or they have shut up the offices. Especially on the retail broking side, I see consolidation is happening very fast because institutional business, I would say there are still a couple of people are going aggressive on shutting up the shop or hiring. But on the retail side, I see I think there are a lot of consolidation which is happening. People are shutting some of the branches. And a lot of effort is there on cost cutting and all. So my sense is that retail business is consolidating faster than the institutional business. Although in long term, you can't have 15 to 20 even institutional brokers in the market. So there would be consolidation. But right now I'm seeing consolidation more on the retail side, and there are no pressures on even the brokerage rates from these levels.
Mr. Oswal, sir, your thoughts then. What kind of a broking model you see coming out, if at all it's going to be some kind of a longer term change over, let's say, the course of the next 6 months to 1 year? Is this just a rough patch that broking is in, or do you think some kind of a newer model or perhaps a different structure itself will come out where operating costs will be lower, more consolidation will happen, as my colleague Anuj was suggesting?
I think broking model more or less remains same, although we can see some kind of activity increasing on the online model. Although in last 3 to 4 years we've not seen much kind of change in the offline versus online. But I think we have to really innovate in terms of the kind of giving the better experience to the customers, and at the same time optimizing the cost, because I think the costs are, while going up, your margins really are I think getting squeezed. So my sense is that there's a kind of, I think, model which is already being I think in the business for so many years. So I don't see any model changing, except that people have to innovate on the cost side as well as on improving the kind of customer experience side, both ways.
Speaking of cost, Mr. Oswal, I mean, what have you observed in the last couple of months since this whole churn has been going through? Employee costs, whether it's analysts or whether you're looking at dealers or you know, brokers, has the cost model started coming off, or are sort of the prices being quoted in the market still quite high just for talent?
I think costs have come down overall. If you look at employees' cost to the total revenue, definitely it was going up in last maybe 2 to 3 years, which has really, I think, I would say the industry has trying to really seeing that the brakes are there on the cost escalation side. We as a firm always believe that the cost has got to be given very importance, and that's what we never had kind of any kind of serious number of branches. We had hardly 25 to 30 branches, even really in the best of the time. So our model is much more on the kind of franchisee centric side, which we think is a win-win situation for the franchisee as well as the organization, because the cost kind of management happens at the local level, which is far efficient than what we can do at HO level. And I think that model is being now seen by all the players in the industry, where people are shutting their own branches and they are more moving on the kind of variable model or franchise model. As far as the retail broking is concerned, I think institutional broking model remains same, and I would say the kind of increments we have seen on the people side in the past may not be there, I think, for this year as well as for next year.
All right, Mr. Oswal, thanks so much for joining us. That's the industry view which has come in.